All right, let's take a deep dive here into the broad market action. And I do want to bring in our guest, Michelle Schneider, Chief Strategist at marketgauge.com. Michelle, always great to have you on the show today. And look, I think the inflation report on Wednesday, really the big focus here. What are you watching at MarketGauge?
Well, in terms of the inflation report, I have it in good guidance that they tend to put the numbers together the way they want to put the numbers together. And that's not to sound cynical. But for example, in this number, there's been reported that they're going to leave out, as we know, they do tend to leave out food and energy, but like coffee prices, which are up 24%. So I don't know if we necessarily are going to get the exact gauge of what inflation's doing, and inflation's been so nuanced. So the cooling expectation will be based on certain areas, of course, that have cooled, but the services area is still a big concern.
Yeah.
So unless it's really far from 3.4, 3.5%, I think the encouragement will be, oh, okay, that's it. The Fed might be more incentivized to actually lower rates at some point this year, but we'll see.
Are there any trades or updates, Michelle, to client portfolios that you're making ahead of this report on Wednesday?
Well, we're pretty well positioned, so really kind of waiting to how I want to add in terms of equities. I mean, right now, I think you have to have a good combination of some commodities. We really like silver, for example, as the metal, even more so than gold. We like commodities like uranium, so we have some exposure there. We even have some natural gas now. I think you have to still have fixed income in there because the rates could be the higher for longer scenario. Emerging markets, we've already positioned a little bit into some of those, particularly ones that are commodity producing. And I think we have to really watch here what happens with the growth stocks because they look like they're ready to launch again.
Yeah.
But yet if we get a hotter number, we could easily see those things come off. So I like having a kind of a rounded portfolio here of many different areas.
Speaking of growth, I know GameStop is not an area you cover. You don't focus on the meme stocks, but as someone who makes a living covering these markets and trying to make sense of them, when you see GameStop up more than 50% today, and I'm sure you saw the tweet that we posted just a bit ago, Roaring Kitty, who started this whole run in 2021, he leans forward in his chair with a game console. What type of sense can you make of this type of jump?
Well, in 2021, which I also heard you mention before I came on, was the peak of the market. And so one could say that the race to meme stocks, and I think AMC is also up today, we're coming to the peak of the market. And certainly, if we look at it from an economic standpoint, whether that stock has merit or not, or whether it was just jumping on that image, as you showed before, and by the way, I loved the movie. If you haven't seen it, it was great.
Terrific.
I think what it really means right now is that people are so disconnected from the overall picture of what could happen here, which is we're seeing signs of the economy sort of stagnating, right? With consumer confidence really down last week while costs are still rising. So this could be just the fun play as we march maybe to some kind of a top. But I'm not calling a top. I'm just saying it would be something to look for.
I think that's a good observation, Michelle, that we had seen all that meme stock mania certainly at the start of 2021 and then 2022, a much different story compared to those record highs that we had at the start of 22 as to how that year played out. But I heard you mention ARM earlier, the semiconductor index. Dave and I have been talking about that, or at least opened the show with that today. The semiconductors, they've been underperforming the past few weeks or so, but do you think with the momentum behind an ARM today that there might be more room to run in some of these stocks that are already looking at pretty lofty valuations?
Well, yeah, let's look at the semiconductor space. I mean, obviously, it's still doing well if you're comparing it to, let's say, transportation, which actually has been kind of lagging, which I find interesting. But NVIDIA hasn't even reported yet. And now there's a new story as we're starting to pick up on our trade wars with China, that China is encouraging less purchases of NVIDIA chips. And so I don't know if I would be throwing a lot of money into that.
Yeah.
I'd say of all the big companies in terms of the AI and the whole chip area and growth, I'm still most interested in Microsoft, and mainly because it's been in this stubborn trading range between 390, 430, and when that range breaks out, I think you would have a good opportunity to get some momentum there. But other than that, we're not adding to growth stocks at this point. If anything, we've taken a lot of profits. And like I said, we're looking at some of the other areas.
Interesting. You mentioned China, and there is reports that the Biden administration plans to quadruple tariffs on Chinese EVs. What do you expect the impact to be in U.S.-China relations and the markets as well?
Well, in terms of the markets, I mean, clearly the EV space has been one of the worst areas to be invested in this year, and there's still a lot of controversy in terms of what's going to happen with Tesla. And so it may actually in some ways give a boost to the EV space in the United States. However, the prices will have to be higher. That's where China comes in with their competitive pricing. As far as the impact on China, that's exactly what we just said. I mean, I don't know if we really want to go down that rabbit hole when we need them to be buying our treasuries, which of course we know they're not really buying right now, and instead they've been buying a lot of gold. So this may not end as well as one would like it to, escalating this trade war.
Michelle, I do want to get your take on the overall direction of stocks. Because I think some Americans, certainly since the start of COVID, have just kind of been confused, right? When the economy is good, the stock market's down, and when the economy is bad, the stock market's up, right? And that's simply because of interest rates. And so I heard you say that you're not necessarily calling a market top, but we are expecting that rate cuts are on the horizon, and I think history would indicate to us that that would mean probably people's retirement portfolios would do pretty well, broad indexes out there that could melt higher. Is that something that you think could happen, or do you think that a lot of the gains have been booked and this trend that we've seen the past 4 years of COVID might actually now be changing?
That's a really good question, Kristen. And quite honestly, when it comes to the bonds, we have to look obviously at the yield curve, which has been inverted for so long. And there's two ways to go. If the Fed does more of a twist in that they start buying on the long bond end and selling on the short bond end, essentially trying to flatten the yield curve, they may actually get a pass on terms of that soft landing. But instead, if they wind up just basically rewinding their whole QT and then lowering rates, it can actually have a very negative impact, I think, because number one, it will definitely goose inflation. Let's face it, inflation has gone up even in the face of this long pause that they've done in rates. And it may actually be more perceived as recessionary. What's the Fed so nervous about? And that's why I'm so focused not just on the bonds and the long bonds and the junk bonds and that whole relationship, but I've been fascinated by the transportation sector because it may not be 70% of the economy like the consumer area is, but it's still a good chunk of the GDP and a huge employer and a huge implication in terms of just how robust our economy is. And so that's been lagging behind. So if those rates come down and that does not move higher as a result, then I would actually maybe switch my gears, not just towards stagflation possibility, but maybe heading to recession, which of course is the best way to fight inflation, is to just drive us into a recession.
Yeah.
So it'll be very fascinating.
It'll be interesting. Michelle Schneider, always a pleasure to have you and get your take. Michelle's the chief strategist at marketgauge.com.